in a couple of years. Mark, I wonder what you make of the tape. Is this calendar at work, or is there something bigger going on?
I think it's a combination. Obviously, the third quarter in September were such awful times for the market. We were due for a little bit of a bounce where the VIX had kind of climbed from 20 to 30, and everything that could have gone wrong, particularly last week with rates and what had gone on with currencies, happened. So now we're into the fourth quarter. We're into seeing earnings season. I haven't seen an earnings miss yet, which is a good sign so far. And I just think we were due for that bounce. We've been calling for it, and this is a pretty big bounce today.
Yeah. Speaking of earnings, a big topic during September was that pre-announcements were a bit light. Now, eventually we did get FedEx and VF Corp and a few others, GE and Nucor. But I just wonder whether or not you think that sets us up well or not well for guidance when we get the Q3 prints.
It's a great question. I haven't seen a lot of those, like you just mentioned, although the gravity of them, you mentioned FedEx, and boy, that CarMax number last week was just stunning for some people. So I think the depth and breadth of some of those misses are high, and it's going to show some differentiation within sectors. So companies that anticipated the rate rise and some of the supply chain bottlenecks, I think, got ahead of it, and those that didn't have been walloped, like we see some of those stocks. So I think it's a positive sign. We haven't seen a ton of them, but the market is still punishing misses, and that doesn't bode well if you really haven't told the street what's going to happen. Because if you miss and you haven't told the street in advance, you're going to get walloped.
Yeah. Meantime, ISM today shows employment contracting, new orders contracting, and I wonder, there's some chatter that maybe finally some of the hiring freezes and layoffs that we've seen, even though that trend's a bit nascent, is beginning to make its way into the surveys, and eventually whether that makes its way into data that the Fed really takes seriously.
It's clear that has worked its way into the system. I mean, the rate rises and the speed and the breadth of the rate rises, as well as the currency moves, I think have affected so many. And you're seeing some of those other signs, right? You're seeing container shipment rates, as well as the amount of containers coming into ports, obviously slowing quickly. You saw some dramatic moves up on the 10-year and other indexes, and obviously those have come down dramatically. That's clearly having an effect. I think the Fed's going to start thinking about that next move, and is that the last move? And that's a question I think you're going to hear a lot of news this week. You have a lot of the Fed governors speaking, but it's clearly bleeding its way into the system. I looked at that CarMax again. I mentioned it one more time. They were hit, I think, much more rapidly and much more intensely than they could have even imagined. And I just think that is a metaphor for what happened in the third quarter. And I think that activity that you talk about is obviously happening on the slowdown in terms of hiring that we're going to see over the next couple months.
Yeah, I think somebody said CarMax was the embodiment of all the headwinds that we've seen across industries in the past few weeks. Interesting.